Hey everybody, how are you? My name is Carlos Salgado, owner of Energy Financial based out of sunny San Diego, California. The title of today's video is called The Four Qualities of a Cash Value Life Insurance Policy. Chances are, if you're watching this video, you've been doing your online research, you're going from YouTube video to YouTube video, and you really want to understand how these policies work, which can be very overwhelming. And with so much information, I mean, it's overwhelming how much information is out there on social media, TikTok, Instagram, Facebook, YouTube. And it's hard to sift through what's relevant or not, what's true or not. And so I wanted to get on this platform to really just provide you some insight. And I believe today's training will really help you navigate cash value life insurance. So if you're working with an agent and advisor, these are the four things that you need to look out for. And I've been doing this almost 2 decades. I've helped thousands of clients on their cash value life insurance journey, especially indexed universal life. And I'm going to show you through an illustration today with one of my favorite carriers, Allianz Life, on understanding these four qualities. Okay. If you are looking to work with a professional, I put the link in my description. If you'd like to book a discovery call, if you would like me to review your policy, I'd be more than happy to do that for you. Again, go ahead and click the link in the description. I run Energy Financial. You can find me on Google. I got a lot of reviews of clients that work with me, and I'll be happy to be a resource for you. Okay, so let's go ahead and get started. I'm going to share my screen here, and let's cover these four qualities of a cash value life insurance policy. All right, so you should be able to see my screen here. Feel free to write these down. Number one is you need to understand structure and design, what that is and what that even means. We'll be covering that. Number two is you need to understand the cost and fees. So whatever your monthly or annual contribution is to your policy, how much of your contribution is going towards the costs of that policy and how much is being deposited into the cash value account. You want to know that to the dollar. Number three is how does your policy perform? How does it earn interest? And number four, very important, is the loans. How do they work? How soon can you access money? What are the loan rates? If you do not know these four things with your policy, it's going to be really hard to understand if what you have is actually catered to your goals and what you intend to use your policy for. Okay. And doing this almost 2 decades, I can tell you that many clients do not understand these four things. They might understand one, maybe two of them, but it's very rare do I find that people say, I'm very clear on these four aspects of my policy. So that's why I wanted to make this video for you. Okay, so I'm going to break it down, showing you an illustration from one of my favorite carriers by the name of Allianz Life. They have a really great IUL. I actually have their software here. And I did this using a 40-year-old male. And I want you to understand how structure works, right? So we're going to talk about cost and design. So bear with me here. So this is a 40-year-old male who's contributing $600 a month, as you see here, right? So that's $7,200 a year. And one of the first things to look out for to see, how do I know, Carlo, is if my agent or advisor, how do I know if they set up my policy correctly? Well, one of the first questions I look for is, how much are you contributing? Well, I'm contributing $600 per month. I said, okay, $7,200 a year. So the first thing I'm going to look at in their policy is what is the guideline annual premium. It could also be called guideline level premium, which is basically the maximum amount that you can contribute to a policy for the life of the policy. And what I'm looking for is a similarity there between contribution and that guideline annual premium. So you'll notice here, $7,200 is what the client is contributing, and $7,200 is the guideline annual premium. That is a match. Okay, and that means that this policy is designed with the least amount of death benefit in order to maximize that $7,200. If this were to say something like $10,000, $15,000, $25,000, then I will tell you right now that this policy is not properly designed or structured correctly, and the agent is making more commission. Right now, the death benefit you see here is $118,000. And that is the least amount of life insurance that we can get away with per IRS law that allows for the $7,200 contribution to be maximized. Okay, so that's what we want to look for. Number one is, does the premium match the guideline annual premium of the policy? And if you see that here, the answer is yes. That's a good sign. Next thing we want to look for is an increasing death benefit, also known as option B. Increasing means, look, we started here with 118,000, but if you look at the death benefit here, it is increasing. That is also another indication of a good design policy. If we have a level death benefit, that's not a good sign. Okay, so if you are setting up your policy for growth, as in cash accumulation, and you have a level death benefit, that means that your costs and fees are higher than they should be. They should be set to increasing, which means your policy is going to meet you at the lowest amount possible, and it's going to be increasing. And the reason it's increasing is because it's taking your account value, your cash value here, and it's being added to that initial face amount, that initial death benefit. So in the event you passed away, not only is your family going to get the 118,000, but they're also going to get that account value that's added on, which is why you see 124, 131, right? So it's that cash value, that account value being added to that death benefit. Okay, so make sure that it's increasing. Number two is cost and fees. That should be transparent to you before you sign on the dotted line. And I find that many clients that I've worked with over the years that I've reviewed their policies, they are simply unaware of how much they're paying for their policy. Don't be that person, okay? How much? Now, in this case, that's one thing I like about Allianz here. Bear with me here. Is that you see the cost, right? So total policy charges here are $1,397. So out of the $7,200 contribution, $1,397 of that $7,200 is going to pay for that $118,000 death benefit, okay? And then so that's how the policy works, is you have contribution, which is premium, minus cost, plus performance. This is where the index credits are, equals your accumulation value. So that's your total count value there, accumulation value, which is minus cost plus performance, okay, after you make those contributions. Now, your cash value in this regard, and sometimes it's called surrender value, that's what's available if you cancel the policy, that's what you walk away with, or if you take a loan from the policy, that's what you have access to in the form of a loan. Okay, typically. So that's what that column means. So if you're someone that is purchasing an IUL policy because you want to be able to borrow from your policy in the near future, then this is a good indicator of what you could potentially expect based on how the policy performs and what you'll have access to. So if you're like, hey, I want to borrow from this policy in 3 or 4 years, well, then you have to look, is 15,000 to 22,000 good for my goals? And if the answer is yes, then now you can manage your expectations. Okay, so that's what we're talking about there with structure and design. And then now we're talking about cost. I want to go over performance with you by pulling up their illustration, which is number 3. Every IUL is going to have a performance page in terms of what your index options are. So if you look at here, what I like to look for in an IUL is, do they have a fixed account? And what is their fixed account currently paying, right? And a fixed account is kind of the general count of what the insurance company is paying on a guaranteed basis, right? So with Allianz, for example, they're paying currently 5.3%, which is one of the highest in the industry. Because when you're not in the indexes, you want to work with the company that you could also allocate into the fixed account so you get some guaranteed growth into the cash value account. Now, 5.3%, because we're in a high interest rate environment currently, at the time you're watching this video, is pretty darn good. And then what you also want to look for is a track record. So I'm not gonna go through every single line here, but Allianz has a great track record of performance. So for example, let's just look at the classic here of these index allocations. If you look at what these IULs have performed at, I'm looking for a company that has a great track record of growth. And Allianz has a great track record of growth, right? Averaging, over 10% in these indexes. And that's really good. So this is not a video to break down in depth how performance works, but you just want to understand how your policy has grown over time. What are the performance options you have? And what you want to see is a track record, right? Is this company tried and proven? Have they actually had growth and they have a way to document that? A lot of times you'll have companies that offer illustrations, but their indexes haven't been around. And so they'll do some backcasting tool, but it's not really a truthful figure, right? Because the index hasn't been around for that many years. So you want something that has actually been around and that actually has a track record. Okay. And so here we see that. And that's something that I feel proud when I recommend Allianz because of those performance indicators that they have. They're proven. And the last thing I want to share with you guys is number 4 is the loans. You want to understand what the loan rates are of your policy, because that's how you're going to access money. So I'm going to scroll there. Bear with me here. Here we go. So access to income tax-free loans and withdrawals, right? So what are the loan rates? You want to understand, are there any contractual guarantees in terms of the loan rates? And that's what I'm looking for with the carrier when I recommend it to my clients. I like Allianz Life because on their fixed loan, that's guaranteed in the contract, 2.91%, years 1 through 10. And they actually credit you to, right? So I'm not going to get into how loans work in this video, but if you understand how the loans work and loan rates, you would know that 2.91% is a pretty darn good rate right now for being able to borrow money from your policy. And they also have an index loan, which the contractual guarantee is they never go above 5%. That is also very good. Okay, so understanding how these loans work and how these rates affect your policy is detrimental. So many times we talk about the performance of the indexes, but if the loan rates are not good, it could really affect when you access money and how you access money, how your policy stays in good standing over time. Okay, so make sure that you understand those loan rates. Very important, and that you're crystal clear on them. So with that being said, I wanted to just cover that with you guys today. Hope you got value from this video. Again, 4 qualities. You want to understand structure and design. Okay, does your premium, your contribution, does it match that guideline annual premium number? Okay, number 2, what are the costs and fees? How much of your contribution is going towards the cost versus how much is going into the cash value account? 3 is performance. How does your policy grow? And does the company have a great track record of growth in their index options? Do they have a good fixed account as well? And then number 4, what are the loan rates? Do they change? Are they variable? Are they fixed? Are there any contractual guarantees? You want to understand that. So I hope you got value from this video. If you're looking for more information and education, I want to encourage you to go ahead and subscribe to this channel. Comment below with any questions. Again, if you're looking for a policy review of what you currently have, feel free to book a discovery call. Go ahead and click the link in the description. If you're interested in an IUL policy for you, for your family, for your business, go ahead and book a discovery call with me. I'll be happy to, again, answer your questions and be a resource for you. And we'll see you on the next video. Have a good one. Bye-bye now.